Today we're doing something a little different. We're going to run a high-level intelligence briefing, but we're not looking at polls, we're not listening to pundits. Nope, we are following the money. We're going to explore what prediction markets, where people bet real cash on what's going to happen, are forecasting for the next year or so. Let's see what kind of future the market is pricing in right now.
So, what's the big question here? It's pretty simple. If you could tap into the combined, financially weighted beliefs of thousands and thousands of people, what would that future look like? That's what we're going to do. We're digging into these data-driven forecasts across politics, economics, and tech to build a real strategic picture of tomorrow. And just so we're all on the same page, our intelligence source here is prediction markets. The easiest way to think about them is like a stock market, but for ideas and events. People buy yes or no shares on whether something will happen. And the price of a yes share, which goes from 1 to 99 cents, basically gives you the market's real-time probability. It's the wisdom, and maybe more importantly, the wallet of the crowd.
All right, first up, let's dive into politics. This is where the stakes are, incredibly high, and we're seeing huge amounts of capital being used to try and predict who's going to hold power in Washington.
Okay, so this is pretty wild. The 2028 presidential race is already taking shape years out. On the Republican side, the market is giving J.D. Vance a commanding 50% probability. That is a very strong early signal that traders see him as the clear frontrunner. But then you look at the Democratic field, and it's a totally different story. It's way more fractured. Gavin Newsom is in the lead, but with only a 37% chance. That tells you the market sees a much more uncertain, much more competitive fight on that side. And if you're wondering how much conviction is behind these numbers, just look at the money involved. This one market, just for the Democratic nominee in 2028, has over $28.4 million in trading volume. This is not just a few people guessing. These are significant financial bets on who's going to be leading the party.
That sheer volume really shows how seriously traders are taking these long-range forecasts. They're putting real capital on the line. And by the way, if you're finding this kind of data-driven analysis insightful, do me a favor and drop a like. And hey, share it if you think it's valuable. It helps a ton.
Now let's look at some other markets, because this paints a fascinating picture of what traders think the priorities are. There is overwhelming certainty. We're talking 93% probability, with over $3.3 million behind it, that court-ordered documents related to Jeffrey Epstein will be released before 2026. The market is basically screaming that this is going to be a major event. On the flip side, look at this. The market sees almost no chance, just 2%, of an early exit from the presidency, and that position is backed by a massive $8.2 million.
Okay, let's switch gears and move to the economy. Here, traders are trying to decode every little signal from the Federal Reserve and the wider market to figure out what's coming for growth, inflation, and financial stability.
So in the short term, what's the market thinking? Well, for the Fed's decision this December, there's a 65% chance they do nothing, just maintain the current interest rates. Only a 34% chance for a small 0.25% cut. The message here is pretty clear. Don't expect any holiday gifts from the Fed. Borrowing costs are likely staying put for now.
But, and this is a big but, the story completely changes when you look out over the whole of 2025. Suddenly, the probability of seeing exactly 2 rate cuts firms up to 65%, and there's over $12 million at stake in that market. That is a really powerful signal that traders are confidently pricing in some monetary easing next year.
Tracking the Fed's every little move is absolutely crucial for investors. These decisions ripple through every single asset class. If you want to stay ahead of the curve with more explainers like this, make sure you're subscribed to the YouTube channel.
Now check this out. When we look at the S&P 500, we see this really interesting split personality. On one hand, there's a sky-high 93% certainty that the index will finish the year in the green. That's huge conviction. But at the same time, traders are way more skeptical about hitting new record highs, giving it only a 32% chance of reaching 7,000. It's the definition of cautious optimism. Yeah, we expect growth, but maybe not a blowout record-shattering year.
Okay, let's pivot to the notoriously fast-moving, sometimes chaotic world of crypto. The feeling here is this weird mix of short-term pessimism with some very specific, kind of quirky long-term bets. So, what are the big takeaways for crypto? Well, for the big guys, Bitcoin and Ethereum, the outlook for this year is kinda meh. The market gives a 48% chance that Bitcoin stays below 80K and a 53% chance that Ethereum dips below 2,500. That tells me traders just don't see a major catalyst coming anytime soon. But what's really interesting is Ripple. The market is basically split right down the middle, giving it a 47% chance of positive returns.
That's a real outlier, a sign of a very specific, maybe even contrarian bet.
The crypto space moves so incredibly fast, and the sentiment can flip on a dime. For more real-time updates and data points from these markets, you should definitely be following us on Twitter.
All right, for our final analytical section, we're going to technology. And the data here reveals a super high-stakes race for dominance in one area specifically: artificial intelligence. It is accelerating fast.
The central question that traders are putting millions of dollars on is this: who is going to have the best AI by the end of 2025? And the answer from the market, well, it isn't just a hint, it's a roar. A very clear frontrunner has emerged.
I mean, just look at this. This is an absolutely powerful illustration of the market's conviction. With over $8.7 million traded, the probability of Google's Gemini being the top AI model by the end of next year is at a staggering 88%. Its closest competitor, Grok, is way behind at just 7%. Honestly, this is one of the most decisive predictions we've seen across all markets. It shows a massive belief in Google's lead.
The future of AI is literally being written right now, and the market has clearly placed its bet. I'm really curious, what's your take on this? Let us know down in the comments. And hey, while you're there, subscribing ensures you won't miss our next deep dive.
But it's not just about the corporate horse race. The market is also forecasting the ultimate prize: artificial general intelligence, or AGI. That's an AI with human-like cognitive abilities. And the timelines seem to be speeding up. There's a 40% chance the market sees OpenAI achieving AGI before 2030, and a pretty significant 23% chance it happens even sooner, before 2028. The market is saying a world-changing breakthrough is potentially just a few years away.
So, let's pull all of this together. Let's synthesize everything. What are the key predictive indicators that pop out when we look at the data from all these different sectors?
All right, here's the entire briefing in a nutshell. Politically, the market is expecting some drama, some major disclosures, and it's already placing these huge bets on 2028. Economically, we've got cautious optimism. Expect some growth, expect rate cuts, but don't expect a roaring bull market. In tech, the AI race is moving at breakneck speed. There's a clear leader, and AGI is seen as being on the horizon. And finally, for crypto, it's pretty much a period of status quo, with really muted expectations for the rest of the year.
You know, understanding how all these different trends connect is just key for any kind of strategic planning. If this data-driven briefing helped you connect some of those dots, we'd really appreciate a like and maybe consider sharing it with your colleagues or anyone who might find it valuable.
So we'll end on this thought. This is the future, as priced by the collective intelligence and the collective wallet of the market. The probabilities are all laid out. The market has spoken. The only question left is, where is it wrong?